This interview is brought to you in association with Rabobank.
Hello, and thanks for listening to another of our Rural Delivery website interviews, where we talk to people with their finger on the pulse of New Zealand's primary sector. Today we talk to Bill Cordingly, who's Head of Food and Agribusiness Research and Advisory and Managing Director of Rabobank International in the Americas region. Bill's based in New York, but he was recently in New Zealand, talking to people involved all along the red meat sector value chain. Bill, good to talk to you.
Great to be with you, Roger.
Bill, you've been down in New Zealand recently. Why'd you come? Were you coming to tell us something or coming to listen?
A bit of both. Rabobank is very committed to sharing insights that it picks up all around the world with its clients, no matter where they are. So part of our role in food and ag research is to spend time with our clients, not only in the region that we operate in, but around the world. So this is a part of our what we call our Visiting Experts program. I'm down here for a couple of weeks, 1 week in New Zealand, 1 week in southern Australia, to talk about some of the trends that are driving the animal protein industry in the northern hemisphere, in emerging markets, but particularly how that might impact the industry in this part of the world over time.
Okay, so let's dig into that. Now, you called it, your presentation that you've given around New Zealand is called Raising the Stakes. Can we have a look at what the stakes actually are in that market in the current time? What are the key things driving it?
Look, I think it's a big discussion, Roger, but the messages we've been talking about are a couple. Primarily, we see a fundamental demand shift going on in the global animal protein world from really being driven by the large Western economies and markets to being much more driven by emerging markets. And when we think about that, that's a complex story. It's not just value or volume in particular. We talk as economists about the incremental demand, which really drives the incremental price point for any commodity. And what we've really seen is that the incremental demand driver for the animal protein industry over the last 5 to 10 years has quite clearly become the emerging markets, and in particular China, as it's emerged. And we've seen almost all roads leading to China, whether they be for animal proteins, for grains and oilseeds, or sugar, or many other commodities for that matter.
When we're looking at animal proteins, I was fascinated to read that actually the one that first cab off the rank after seafood is actually chicken, and you're actually forecasting that this is going to be the most consumed animal protein in the world by 2020. What does the mix currently look like across, say, seafood, poultry, beef, perhaps lamb as well?
Sure. Well, I think what we've seen is that's really a continuation of quite a long-term trend. Pork is, I think, the most highly consumed of the proteins in the world on a global basis, and what we've seen is that has continued to increase over time quite rapidly. But poultry has increased even more quickly, and what we see is that poultry will take over from pork in 2020 as the most consumed meat in the world, and that's really driven around the economics of converting grain into protein and the cost of that. And poultry is clearly the winner over time, as those industries have increasingly driven towards productivity and improving the efficiency of that supply chain. So really that's I think the big trend. The other side of that is beef, which was traditionally, for example, in the United States, the most highly consumed animal protein, lost that position some years ago now, a few years ago, to poultry. But on a global basis, what we've seen is on a per capita basis, the gradual decline in per capita beef consumption, and certainly the quite steep decline in per capita beef consumption in the US, where we're based. Couple of implications there are quite clear, and or reasons, I guess, we should look to, and that is just the high cost of producing beef relative to pork and chicken. And what we've really seen in the last 5 to 10 years is that trend even more exacerbated and accelerated as global grain prices have taken off since the second half of the last decade, with US ethanol policy and increasing emerging market demand for grains and oilseeds, really putting a lot of pressure on the cost structure of the beef industry in particular, and that's really led to a steady decline, or quite a rapid decline, if you like, over that period in terms of the cow herd in the US and the ability of consumers to afford that product. So what we've seen is demand getting increasingly rationed through price and consumers trading down out of beef into either lower value cuts of beef or indeed cheaper protein options, whether it's a hamburger to a chicken burger or into a pork type product.
You'd think that actually that would be great news for New Zealand. Pastoral advantage, so not exposed to that global commodity price index that sits around those grain sort of type feeds, largely producing a high quality product. Has that actually been the case? Is that the niche that we should grab?
If you look at in international markets, the returns in US dollar terms to New Zealand product have clearly over doubled in the last 10 years or so. There's just a clear trend towards the premiumisation of this product and the increasing value coming to it in a global market. Of course, the problem there has been the equally strong move in the New Zealand dollar. So, whilst international prices for New Zealand, sheep meat and lamb and beef have well over doubled, in local terms that's probably only a 20 to 25% increase in value, which of course makes it very challenging for the producers here to continue to make that business profitable in light of terrific returns that are being accrued to other parts of the rural economy, particularly dairy.
How do you think we play that game if we need to keep that strong premium up? What do you think are the key steps to us doing that? Perhaps I might split this into two segments. The key steps we need to take in those established markets in the West, and the sort of steps we need to take to continue making inroads in the East.
Yeah, well, I think it's a very good question, Roger. Clearly in emerging markets, they're newer markets for New Zealand. So a focus on what really drives those markets or opportunities in those markets is key. And the first thing is access, the ability to have access for your product to those markets that are going to become the bigger consumers or that incremental buyer of animal protein over the next 5 to 10 years. New Zealand's traditionally been very focused on that, done a great job. Case in point being the free trade agreement that's been negotiated with China some time ago and the benefits flowing to New Zealand relative to other suppliers of beef and lamb into China as a result of that free trade agreement, some significant tariff advantages, etc., that have meant New Zealand have been probably best positioned to benefit from the opening of the direct trade to China. So, having access is key for those emerging markets, but also having that, rock-solid supply chain of high-quality, assured, safe animal protein is absolutely essential. We've seen so many disease scares, so many food safety scares in recent years, particularly in China. It's clear that the Chinese consumer is quite petrified of their food chain and is increasingly looking to supply from offshore, which is perceived as being of higher quality and higher safety. So New Zealand very well placed in that game. But equally, if we look beyond, the markets like China and other emerging markets, whether they be in the Middle East, Africa, or Asia, and turn our mind to important high-value markets for New Zealand in Europe, particularly for sheep meat, and the United States for sheep meat or lamb, but also beef, you've really got to think about that premiumisation of the industry that's going on in those markets. Consumers are somewhat divided in the US. There's a very high demanding consumer that's looking for all of the attributes in their product, not just what's the price, is it of high quality, can you get it to me on a regular basis, but consumers are increasingly wanting to know what's the environmental impact of this product. Has it been treated humanely through the process? What's the story of the product? Is it organic? Is it chilled? Is it natural? All of these trends are increasing in the mind of the US consumer in particular, and given New Zealand's access into that market, I think it pays and will pay New Zealand exporters and producers to really think about how the country and the individual players can tap into those emerging trends and really brand the product and take advantage of all those attributes that New Zealand's built up over a long period that are now increasingly sought after in the US marketplace as consumers become more and more sceptical about I guess what the food industry represents and whether or not there's whether they trust the food industry the way they might have once in the past. I think it's clear that the US consumer at a general level has got quite low trust in the food industry for many reasons.
Do you think there's a possibility, well, we actually know it's happening, where that neediness, I guess, from that market makes people think, look, it's just easier to go to China or some of these other markets where I'm getting the same money and there isn't the same pressure as there might be in, say, the US? Do you think that's dangerous if we just go for the fast money? We won't be the only players. We've got first mover advantage in China, I'll admit that. But that won't be there forever. So how do we play this game so that we keep a foothold in all of those markets? I guess it's about spreading risk.
Oh, absolutely. I think anyone will tell you that a diversified portfolio is critical. And from an export market point of view, we all understand that markets like China or Russia or many emerging markets, things go wrong, and they can be very volatile. They can be there one day and not the next. So I think two things. One is, at a general level, to have a diversified set of export markets, and more particularly looking at those higher value markets that are much more consistent in terms of their demand structure. They really need to remain a focus. After all, the premiums that New Zealand can achieve for its lamb into Europe are much more attractive than in China today, and therefore that really needs to be a point of focus. Now, clearly at the lower end, more product is being redirected out of markets like Europe into China, and the average returns across the carcass or across the export market are increasing because of this emerging market demand. But a focus on all of these markets is critical, and indeed on new and emerging markets that will come over the horizon that perhaps the country isn't tapping into today.
From your time here, how do you rate the way that we're going about it, the way that we're looking at these challenges and responding to them, both on farm and in the supply chain?
Yeah, good question, Roger. Look, in a very brief visit, I guess I've been really impressed by what I've seen and the clients we've spoken to, Rabobank's farming clients and processing and exporting clients. I think they all recognise the need for the industry to continue focusing on export markets and focusing on critical success factors like market access, but also issues like supply chain integration, where being better organised upstream will help you downstream in terms of supplying the sort of product that the customer wants in a way that they want to receive it with the right integrity through that chain. Now, that's not to say it's easy to do, and I think that's the battle that I see the New Zealand sheep meat industry and beef industry grappling with at the moment. How do we create shared value for each of the players along the value chain to cooperate, to partner, to deliver a more consistent product and a more consistent service into the marketplace? How does the processing sector work with the producing sector to deliver on a brand promise into a marketplace? That's challenging when the relationships between processors and producers are somewhat driven by the transactional dollar on the day, as they are all around the world. But when we look at supply chain arrangements around the world, when we look at branded food players, what they're doing, they're looking to move their supply chain relationships from what we might call transactional to more transformational, to be able to create more value in the value chain and de-risk the value chain, two equally critical points in terms of creating a sustainable business model. So I've seen all of that in New Zealand, a recognition of that, but also a recognition that that's challenging in a marketplace where everyone's operating a business and needs to develop a model in which they can, generate a return on equity, a return on capital, that's suitable and appropriate given the significant investments that are being made.
Bill, looking at the way that the US markets have developed, is China going to follow those same trends? Are those same things that we're now seeing in a more mature market going to evolve in China, or do you think not necessarily to the same extent, that same the animal welfare issues might be the first and foremost, but there's plenty of other things that the US wants that are not currently present in China. Do you think they will evolve over time, or that the market is just fundamentally different?
I think they're fundamentally different markets. What you're dealing with in China is an enormous shift going on in terms of just the pressure on the agricultural system. Consumers are becoming more demanding, but around different things. In China, I think it's still about safety, but increasingly about quality. And so, Chinese consumers are definitely looking for some sort of assurance, whether it's a Western brand with the emergence of, say, KFC in China and other brands like McDonald's. Those sort of trends we've seen in other developing markets over 20 or 30 years. American equals quality. I think that continues to emerge. But in terms of the particular market dynamics in the US around consumer preferences, the drive towards convenience, dual income households, single person households, all of these trends are quite different than we're seeing in China, but also China is a very different place culturally. So I think safety and quality and availability are the key for China for a long, long time. And for an exporting country, it's got to be around guaranteeing that disease freedom, continuing to push for market access, and then developing the right partnerships in China so that you can actually deliver to what is a consumer that's increasingly looking for product from the likes of New Zealand and Australia and the United States. On the other side, I think the US consumer is still stretched following the recession. Clearly, they're eating less protein than they have before, but there's a certain segment of that market that's really responding to a more natural product, and I think that's where New Zealand has a big opportunity over the next 5 years or so.
Glad to hear it, Bill. Look, thank you very much for taking some time today. We really appreciate it. Hope to see you again here sometime soon.
Pleasure, Roger. Had a great time.
Okay, thanks. Bye-bye.
This interview was brought to you in association with Rabobank.